Hello, everyone, and welcome to this episode of Ignition Time. Thank you so much for being a viewer. Thank you so much for being a subscriber. This channel, the Ignition Time channel, is about the country, the economy, as well as our money, as well as your money. I have done another video on our channel talking about how the US government makes money and how the US government spends money. Right now, at this moment in time, the US government spends significantly more money than it brings in. We are well over $25 trillion in debt. And almost 25% of this debt, I'm talking right around $6 trillion, is a direct result of all the stimulus spending and the associated measures as a direct result of this pandemic. In case you're looking to blame a party, you're like, hey, let's blame the Democrats. Right now, the Democrats have 50 seats in the Senate and the Republicans have 50 seats in the Senate. In case you're looking to blame somebody, I urge you to look at the facts. I believe both parties are to blame. The Republicans have cut taxes significantly and reduced the income of the federal government. The Democrats have spent money to try and help the unemployed, to try and help those who are less fortunate than all the wealthy billionaires and trillionaires in America. However, the Democrats have tried to spend more money and are spending more money to help the low-income earners and the middle-income earners, much to the chagrin of all the billionaires and the multimillionaires all over the country. But the fact is, the Republican Party cut taxes, which means less income, and the Democrats increased spending, which means more expense. Now think about this. If you have less income and more expenses, what happens? The entire business, in this case, if you look at the business of our country, the entire country goes deeper and deeper into debt. So I started thinking about this. How can we actually pay for all this debt? So I said, let me keep this really simple. How can we pay for the $1.9 trillion American Rescue Plan? Well, lo and behold, a new study has shown that as far as rich Americans go, the richest Americans fail to report. In other words, they do not report one in every $5. 21% of their income goes unreported. Now, I'm not talking about tax avoidance through loopholes. I'm talking about potentially flat out tax evasion. Remember, the rich have access to accountants, they have these lawyers, they can find these tax loopholes. But when do we cross the threshold from essentially creative accounting into tax evasion, which is illegal? People go to jail for tax evasion. In fact, this was the subject of a rather interesting exchange on CNBC where the hosts discussed that the rich are using sophisticated strategies, setting up partnerships when they're essentially one-man shows, that the IRS is unable to detect. Because remember, the IRS is fundamentally understaffed and they use computer algorithms, they use software programs to try and find instances of fraud. But the rich use sophisticated strategies that the IRS cannot detect, and they fail to report one in every $5 that they bring in. This is mind-blowing. What if all this money was collected, and how much money would that amount to? I'll cover that towards the end of this video, but first, let's take a look at this interesting segment on CNBC about the rich fundamentally not paying their fair share of taxes. Let's roll the tape and watch.
The wealthiest 1% of U.S. households fail to report about 21% of their income. That's according to a new study that's being published by the National Bureau of Economic Research. Researchers there found that the richest Americans use sophisticated strategies that random audits don't detect, including businesses that are set up as partnerships to pass through income to individual tax returns, avoiding taxation at the corporate level. The commissioner of the IRS referenced this new research in congressional testimony last week. He said each additional dollar spent on tax enforcement could yield $5 to $7 in revenue. But that's a good one, where individuals are pretending that they're businesses and passing that through. That's something we should really crack down on. Instead of raising rates, why don't you go after all the people who are kind of getting around at the edges and tighten things up?
I just don't understand what we're really saying here. Is it legal?
I don't think so. I think
it's
at
then
the
that's
very
not
best,
avoidance. That's evasion.
Disingenuous.
That's not avoidance. That's tax evasion.
Yeah.
And that's why
I think at the very best, it's disingenuous. You're looking to get these lower rates and pretending that you are a corporation when you're an individual who should be paying
it should be clear in the law,
rates.
though. Disingenuous, or those are all words. It should be clear in the law. If you're breaking the law,
it's probably a gray area.
Well, if it's a gray area, then you're bending the law, and people are going to do that.
But the law should be clearer. Make the law very clear. I mean, that's what I mean. Get rid of any of these.
if you evade taxes, you should go to jail. There are penalties where you go to jail if you are deliberately evading taxes. Now, if you're setting up
but I think
sophisticated
this may be a case where it's
strategies,
not very right to try and work around the gray areas of the law where it's not done more clearly. This is something that we should make very clear. If you are an individual who's pretending you're a corporation, I can hear a million people. I know people who do this.
Right.
I can hear the excuses for why you're doing this. But as a result, you're not paying the individual tax rate for the work that you would be doing, this W-2 work. That's crazy.
But then you get into the finger pointing to real estate people or for companies that have 10-year loss carry forwards and things like that, and you have finger pointing that they're not paying their fair share when it's totally legal. So it's either evasion or avoidance.
If you need more money. Look, if you need more money, I wish that Congress would be clearer about the laws and then the IRS would enforce those laws rather than raising taxes on everybody who's already paying those high rates because we're not avoiding it.
Right,
I prefer to see them tighten up around the edges.
There's legal strategies that people are perfectly justified in using. Yeah, if it's legal, I would, if you can do it, that's. If it's avoidance, it's one thing. It's very clear. Avoidance is what there are that Supreme Court Justice Hand, whatever his name was, said it's patriotic to make sure that you don't pay a penny more than you're supposed to pay. I know we've got patriotic millionaires who, by the way, never voluntarily pay anyway. They just lecture everyone else. But if it's evasion, you need to go to jail. And if you're not if you're not reporting income that you're supposed to report, and that's done all the time, you see people get caught doing that, and they go to jail. They're in trouble. I mean, it becomes a huge scandal. Now, if you're setting up, these intricate, that's unfortunate. Rich people can find really great accountants to set up really intricate, especially estate taxes. You think rich people pay estate taxes? They said they got all kinds of ways that they get around that. So then change the law. But if it's within the law, then, I would do it too.
Very surprising indeed. In fact, here's an article on your screen that was published by the New York Times, how to collect $1.4 trillion in unpaid taxes. Now, will we pay for the entire $1.9 trillion American Rescue Plan by collecting unpaid taxes from the rich? Almost. But $1.4 trillion gets us 75% of the way there. Again, here's the headline of an article on your screen. Wealthy Americans are concealing large amounts of income from the IRS. There is a straightforward corrective. Now, if we start collecting more money from those who owe the IRS more money, instead of raising taxes, we could start to cut down some of our debt, and that is the focus of this article. As always, you'll find the link to all of our resources in the description section below. So, before I get to the important part, which is how can the IRS collect $1.4 trillion in taxes, and where will this money come from? This money comes from taxes on unreported income by the wealthiest, by the richest 1% of our fellow Americans. Before I get to that, I want you to know that all the low-income earners and the middle-income earners, when they get a W-2 from their employer, that W-2 information is on file with the IRS, so the IRS knows how much you got paid. Therefore, the IRS can easily collect taxes from W-2 employees. But when someone has multiple business entities, multiple corporations, then it becomes harder for the IRS. And that's when the IRS depends on the individual to honestly file their tax returns and pay their fair share of taxes. Now, some people say, hey, we should essentially, hire more IRS people. We should hire more employees. We should invest in software. But that's not the solution to the problem. Here's a very interesting solution to the problem that was actually proposed by Charles Rossotti, who led the IRS from 1997 to 2002. And he essentially says a new approach is needed, and that approach involves the IRS getting information from banks, believe it or not. So Rossotti says that Congress needs to change the rules by creating a third-party verification system for business income. And by the way, you will see Mr. Rossotti's plan on your screen right now on his website, shrinkthetexgap.com. And what he writes is revised criteria and process for financial institution information, reporting of low visibility income. So what is his proposal? According to the New York Times, under the Rossotti proposal, the government would require banks to provide an annual account statement showing inflows and outflows of money, like the 1099 tax forms that investment firms have to provide to their clients. Individuals would then have the opportunity to reconcile what Mr. Rossotti dubs their new 1099 forms with their reported income. In other words, the banks would generate a new kind of accounting report that would tell the IRS how much came in, how much went out. And that needs to match with the tax returns of these rich individuals. If that doesn't match, the IRS can audit and go ahead and collect the money. So essentially, if let's say a rich person wants to say that a certain deposit was a gift, it was some sort of a tax exempt deposit, then they would have to justify that with the right kind of documentation. And I also want our viewers and subscribers to know that this entire problem is much, much worse than the IRS originally thought. The IRS knows that some people avoid their taxes, some people break the law. But here's a headline of an article on your screen from the Wall Street Journal. High income tax avoidance far larger than thought, according to a new paper. The very top sliver of high income Americans may underreport their incomes far greater than what the IRS originally thought. The problem could be double or triple what the IRS originally thought. So folks, that's the bottom line. The IRS can collect upwards of $1.4 trillion, almost the entire cost, 75% of the cost of the American Rescue Plan, by simply improving the way they gather data and going after individuals who avoid their taxes, who evade their taxes, which is incredible when you consider the amount of debt that we are in as a country. Let's try and find those gray areas and make people pay their fair share of taxes. And on top of that, if individuals who are at the top income percentile, the top 1%, need to be taxed more, that can be done. But first, it might make sense for the IRS to work closely with banks to identify those who are avoiding their taxes. And there's one authority that can mandate that, and that is Congress. In other words, the House and the Senate have to pass a bill telling banks to share their information with the IRS, and that is where this gap can be plugged. Let's hope that the two sides, meaning the Republicans and the Democrats, can come together to do that. Thank you so much for watching. My name is Dr. Nitin Chhoda. Thank you so much for being a viewer and a subscriber. This channel is about the country, the economy, as well as your money. Please click the like button. Please subscribe. Please enable notifications. This way you'll be instantly notified when we release new videos. Also, it really helps out the YouTube algorithm. Thank you so much for watching. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.